For decades, the global spirits industry viewed India primarily through one lens: sheer volume. It was a massive, highly predictable market geared toward the continuous consumption of standard, everyday brands. Radico Khaitan built an empire in this exact environment. Over several decades, they captured huge swaths of the domestic market by scaling up heritage volume brands like 8 PM Whisky and Old Admiral Brandy. But the Indian consumer began to mature. A younger, more affluent demographic started asking questions about provenance, authenticity, and how their drinks were actually crafted. They prioritized distinct flavor profiles and local storytelling over conventional mass production. This created a clear threat to legacy business models that relied entirely on pushing millions of standard cases. To survive this shift, a massive volume distiller faces a difficult balancing act. They have to pivot their identity toward high-end luxury to capture new growth, without alienating the vast, traditional consumer base that keeps their operations running. Radico Khaitan's answer is a strategy they call Indie Luxe. Instead of importing foreign luxury concepts, they take authentic Indian heritage, specifically regional botanicals and historical distilling techniques, and translate them into premium global labels. The mechanics of this pivot are driven by their legacy products. The highly predictable revenue generated from their everyday volume brands pays for the long, expensive, and high-risk process of developing luxury spirits. They are not abandoning their past. They are actively using their established scale to fund an aggressive shift from pushing volume to capturing value. To understand how this works, look at the sheer size of their traditional engine. In a single year, Radico Khaitan produces and sells 38.33 million cases of Indian-made foreign liquor. That scale consistently lands them in the global industry rankings. Magic Moments, for example, sits as the 5th largest vodka brand in the world by volume. That volume is reinforced across other categories as well, anchored by legacy heavyweights like Contessa Rum and Morpheus Brandy. Holding these massive, entrenched market share positions creates a financial fortress. It ensures the company has the cash flow necessary to absorb the inevitable setbacks that come with launching new, high-end luxury products. With that safety net in place, they began launching their premium challengers, establishing a strong foothold with the globally recognized Rampur Indian single malt. They followed that up with Jaisalmer Indian craft gin, an expression reliant on regional botanicals and steeped in Rajasthan's ancient desert trade routes. The portfolio is now expanding even further into the ultra-premium space, with recent additions like the Spirit of Kashmir luxury vodka. The appeal of these newer brands rests entirely on their origin. Rather than trying to imitate Scottish or European distilling profiles, they succeed by leaning heavily into authentic Indian craftsmanship. This financial snapshot for fiscal year 2026 reveals a total net revenue of over 6,050 crores, an aggressive 24.7% jump. But the critical metric is volume growth in the high-margin prestige and above category, surging by 28.5% year-over-year. By selling a higher mix of these premium cases, operating profit, or EBITDA, crossed 1,018 crores, driving a highly efficient 25% return on capital employed. These specific metrics confirm that the theoretical pivot toward premiumization has materialized into a highly profitable reality. Looking at the cover art of this annual report, the juxtaposition of Indian bottles against global skylines highlights how this strategy extends beyond the domestic market, with export operations now reaching over 100 countries. These bottles are sitting on the same top shelves as historic Western luxury spirits, directly competing for the exact same high-end consumer on global turf. As international markets increasingly accept these premium expressions, it actively elevates the global perception of Indian manufacturing capabilities. They have successfully taken the standard label of Made in India and upgraded the narrative to Crafted in India, celebrated globally. The broader lesson here is that moving upmarket cannot be rushed. Building a luxury portfolio requires patient, multi-decade brand stewardship and careful capital allocation. It also requires an uncompromising commitment to your own history. The ultimate differentiator in a crowded global market is a genuine connection to your origins. By leveraging their massive volume engine to patiently fund the Indie Luxe vision, Radico Khaitan has taken India's legacy and turned it into the world's choice.